Hello guys, this is Daniel. So pretty much today I wanted to go over how do I create one of these spreadsheets. This is the one. This is one, for example, for 2024. Now I already have several years worth of this information, but pretty much what I track. Keep in mind that this is a beginner friendly. You can add all sorts of metrics and distances and ratios. There's a lot. There's so much that you could do once you start collecting. Um, so this is the one that this is a pretty basic one that I'm doing. For example, let me give you an example. Here in January 2nd, 2024. So pretty much what I do is I would use any scanner. That one doesn't have any scanner. And what I look for is pretty much anything that has gapped up over 5%. The only ones that I track are the ones that have over 1 million pre-market volume at 6:25 a.m. This is the LA time. New York time, stock market time, that would be 9:25 a.m. So at 9:25 a.m., anything that has over 1 million volume right at 6:25 and has gapped up over 5%, those are the ones that I track. And this is pretty much it right here. So let me give an example of one. For example, LBPH on January 2nd, 2024. We're going to go to LBPH. January 2nd, 2024. Let's look at this is fine. 5-minute chart. So pretty much what I do is I just get the information, the first columns, the first couple of columns, date, of course, ticker, from the whatever scanner you use. You could use there's a whole mess of scanners. The one I like to use is Trade Ideas, but there are several ones that you could use. There's some that are free and are actually pretty good also. So this one, you would start with the price, the ticker price cap, outstanding shares, the change the previous day, the pre-market volume. Remember, I mostly only track those that have 1 million pre-market volume or greater. Anything less, I don't track. The float, you just pretty much copy from here, type it over here, short float volume. And then this is a ratio right here, the pre-market float to volume. All I'm doing is I'm getting the ratio of pre-market volume to float, because a lot of times when you do have a a float rotation, it'll give you more idea, a sense of how much is it possible that it could keep rotating more and more. So if you're shorting, if the short rotation is too high, the float rotation is too high, it probably wouldn't be a good idea to short it, as it's possible that it could just continue going up. So this is one ratio. So as for LBPH, we were going to start. So pretty much is it a previous close? We just hover over the closing price right here. You're going to see over here on the C, it's going to see 5.97. Pre-market high was the highest point, and the gray area, that's the pre-market area. That'll be 19.7. Open, that's your first candle right here. What the opening price, that'll be 18.48. And then you can get, once you have those two prices, you can use Excel to tell you how much it has spiked pre-market. It's like 223. So right here, it's where it calculates it at 229. And then from the highest point to the opening price, you can also have Excel do this for you. It pretty much went down. I call it the pre-market. The pre-market decline is like a 6%, 6.9%. And then you type in the highest ticker, which in this case is 2568, 2582. That'll be your highest ticker. Your lowest ticker, one of these right here. You look for the lowest ones, and then you could see how much it spiked up For example, if we go here to the opening price, we go up, it spiked up 39%, spiked down 12, approximately 39, 12, and closed at 36, 39, 12, closed at 36. And then this is another metric that you could use. You could see how many bars. Sometimes it does help if you sort them out by how many bars it has traded with high volume pre-market. You can also start finding some patterns. If you sort your filter, you can try ratios, and you will come up with patterns that might help you. Find one pattern that you like that you could just repeat over and over and over. So for this particular one, this is pretty much it. You just do that one. We can go to the second one. I'm gonna try another one. ROI. That'll be this one right here. This information, we copied it from the scanner, and we would start right here. Previous close, right here, close 0.35. Well, this one had a stock split. That's why it's not the same. Actually, here we go. 0.35 pre-market high, 0.75. Opening price, you hover over here, 0.5. Highest ticker, 0.53. Lowest, 0.39, and so on and so forth. And then you just have Excel calculate these columns right here for you. So if this is your opening price, you want to know how much it spiked up, how much it spiked down, and where did it close. And that's pretty much it. You can do that over and over. Once you have several months worth of this data, remember that it's also seasonal. So if you have data for January and February and December when the market is hot, it's going to be different than data from, say, May, June, July when the market is not hot. It's very weak. So they will differ. So it's important that you stay consistent collecting your data. Now, I know it looks like a lot. So if you don't have anything, it will take some time to catch up and start building. But once you're up to date, really just doing one of these, it doesn't take you more than like 4 or 5 minutes. And that's all you have to do every day. You just put 4 or 5 minutes, so you can stay on top of the current market trends. And then you're gonna find, once you start doing that, you can start sorting. Say, for example, this one, we could sort it by how much has it declined. Let's say a pre-market gap up. How much has it gone up pre-market? We want to get the highest on the top. So this, how much has gapped up. You're going to see that a lot of these, they do reach pretty high spike levels. The lower you go, the less that it spikes, the less that it tends to spike. So, if you're trying to short, it's not such a bad idea, shorting here where you don't see that many high amounts of high spikes. So this is a great it's a great idea to sort, filter. You can look for different patterns, different things, and this should help you integrate into whatever your strategy is. Okay. So that's pretty much it. Let me know if you have any questions. Thank you.